In this episode, we speak with Bob Morse, co-founder and managing partner at Strattam Capital, a private equity firm with over $1 billion in assets under management, partnering with founder-led B2B software and technology companies positioned to become vertical market leaders. Since its founding in 2014, Strattam has completed more than 50 partnerships, helping founders scale their teams, expand market reach, and adopt transformative technologies, including AI, to solve the customer problems they understand so well. Prior to co-founding Strattam, Bob was a partner and investment committee member at Oak Hill Capital Partners and held roles at GCC Investments and Morgan Stanley. He graduated summa cum laude from Princeton and earned his MBA from Stanford, where he was an Arjay Miller Scholar. Bob was recently named a top software investor of 2025 by GrowthCap. Strattam was also recognized as a top private equity firm of 2025. I'm your host, Arjay Lumba. We hope you enjoyed the show. If you liked the episode, click to follow.
Arjay Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Bob, thanks so much for taking the time. It's great to be with you.
Arjay, thanks so much for inviting me to be part of this today.
So it's been a little bit since we last saw each other. Really glad we got to spend some time together back in Jackson Hole. Gave me a chance to see how athletic you were. You were able to summit the mountain.
It was a great conversation in between all the breathing that was going on as we were up there at altitude doing the hike. It was the most, I would say, ambitious group event I've been part of and just such a terrific event overall.
Probably not as arduous as the regular rowing you do.
You know, I was actually out there this morning. It's one of the things that's been part of my life here in Austin and in other places with some kids who've been in the rowing world and now helping with some things around U.S. rowing. And I'll be out there bending an oar at the head of the Charles next weekend. So we're trying to stay out there even as we're spending time, working in the software world. And we'll talk more about that in AI today.
So I'd like to start at the beginning, and we'll definitely spend time focusing and honing in on your investment activities more specifically, as well as technology and AI. But if we could, I'd love to hear about the founding of Strattam, why you decided to embark on this new path. And, maybe leading up to it, you were at Oak Hill for over a decade.
I was for 12 years and led the technology practice there as part of a multi-industry firm that really came out of a family office and a principal mindedness about returns on our capital and maybe our partners alongside us. And I would say that principal mindedness has been something that stayed with me my whole career. It's also a questioning organization that has started new opportunities and ventures over time. And it was clear to me even 10 years ago that there was an opportunity to add more value in the investing process as the market was changing. After the global financial crisis, with the regulation in the public markets, a ton of activity moved to the private markets, and what used to be illiquid private markets where you could identify mispriced asset became much more mature markets. And so I think the answer to how do I generate great returns in a more efficient market is I have to do something different with the asset while I own it. I don't know if other of your podcast guests have had this experience. I had this experience, the so-called first board meeting surprise problem, where in the old days you would negotiate the deal and you go to the first board meeting, kind of reveal your plan, or the operating partner shows up and you have a disagreement, with management over something. And I was committed to solving that. And in founding Strattam, one of our founding ideas beyond just specializing in technology was we're going to have a hyper-transparent investment process. We're going to share all our diligence with the founder before we sign the deal and agree the action plan, including tough topics like succession, including things like pricing they could do without us. And if we can't agree it and we lose the deal, that's okay. Let's see if we can build a firm where we don't have to do that deal. We only do the deals where we really are transparent and have a handshake on that going into it. And I have to say that's really made a huge difference for us.
And so was it, you saw this unique way of approaching private tech investing, growth focused, maybe founders. I mean, it's a unique decision to go off on your own and do it. Did you find that at that moment, that's what you wanted to pursue?
I think everybody who founds a firm has this moment where they say, not quite like this, but like this. Like, I really have to see it. I have to try it. And I can't quite do it within the framework, that I'm in.
Mhm.
And that was how we felt. I started, two other colleagues from Oak Hill and another person who joined us before the first deal. The four of us have been together through the entire now 11 years of the firm. 3 funds, 16 platforms, over 50 founder-led transactions in total. And so it's been a great run. And I'm still very grateful to the things that I learned in the terrific organization that is Oak Hill and some of the people that I worked for and worked with. And there is an element of starting an investment firm where you are also the entrepreneur. And I would say I have a little more sympathy maybe than I did before about all the things that happen when you are starting a firm. You've been a firm founder. And I think that's given extra empathy for what the founders go through in building the businesses that they build.
Mm-hmm. Would be curious to hear about your intention around the culture at Strattam.
Look, I would say the first piece is this belief in continuous improvement. And there's a questioning element to what we do. Things like changing the investment process to shared diligence before signing, feels scary the first time you do it. And it has been perceived to be and really been a better choice for founders, all of whom have a friend who's maybe had a, let's say, mixed experience with a private equity firm along the way that had to do with, do I really understand where we're going to go? The second piece is a real belief in those founders. I think that in private equity, the role of the founder, people can have different views. Our founders typically come out of industry. I worked at Kraft. I had this problem. I left. I wrote a piece of software. And now Kraft uses it, and Nestle and General Mills, and it shouldn't be 50 more. And we think that understanding of the customer problem is really, really fundamental to the value creation in these businesses. I understand my customer, and I'm using these new technologies, to solve that problem. And we look for that sense of continuous improvement in the founders. And we have had some deals where we can't get agreement and we lose the deal. Those tend to be places where someone has built a profitable, growing business, but says, I just want to keep doing it the way I'm doing it. I'm just not that comfortable with change.
Mm-hmm.
And we would be a terrible partner. This is for someone who is ambitious and wants to get there and would like help with the resources to do that.
So let's move into the 5-point plan. I think it's wonderful that you've got it structured and laid out and it's there for everyone to see. Would you mind walking us through it?
Sure. The 5-point plan is that set of actions we agree before we sign the deal. And I'll say a few things we've learned over the years, like through our own mistake and lessons learned. One is when you ask the founder, what should we do together? If you could wave a wand and make it happen, you usually get a list of 50. And so part of the reason it's 5 is because, 50 is just too many. And how do we take that down to just a few that we really can action? The second is, this is on company letterhead and written in the founder's voice. And so on the day that the transaction signs, that founder can stand up and say, look, I had a lot of good choices of who to work with. And we have decided to work with Strattam. And here's what we're going to do with the money. 1, 2, 3, 4, 5. If you work on any of these things, good things will happen for you and for the company.
Mm-hmm.
And that's just so well received because taking a control investment from a private equity firm usually causes a certain level of stress among the team, and they're like the critical asset. And so giving them direction and clarity. And then the third, and I'll stop here, is it gives a framework for our engagement with the company.
Mm-hmm.
If you can do it, great. If you need help, we have a value creation team. We have a network of advisors. We have deep expertise in these various areas. We're here to help. And if you're not doing it and you're not asking for help, we need to have a serious conversation because we all agreed before we went into this that we would, for instance, build a new demand gen marketing engine. And every once in a while, we have to come back to that because some of these are hard. They might deal with people changes or other things that seem scary. And so the fact that the founder is sort of signed up for that before taking the investment helps with that buy-in, which is just so critical to having a good relationship between the private equity firm and the founder.
Could we get maybe an example?
Sure.
One that you particularly have affinity for.
I think everybody here involved in the story is going to be okay with me telling it, but I'll share one from an early deal. We had an early deal with a founder-led business where the head of sales was I have to meet people in person, book half the business every year, himself. And we had part of the 5-point plan to build that demand gen, marketing. And the head of sales just couldn't get his head around it. I won't do it. It won't work for me. Telemarketing won't work. The founder was shaking in his shoes. What if I make this change and he leaves? And we went to the head of sales and said, look, we'll make you the highest paid person, but we all committed to do this. We're going to do it. And the head of sales quit. And the founder found someone who wanted to work in that way. The company went from 10 of revenue to 50 4 years later. The founder had a great outcome. And when we sold it, that initial head of sales hand wrote a letter to me saying, "Dear Bob, because of the stock that I kept in this company, I have now put all 3 of my children through college. And I just want to tell you what a great example." So it sort of worked for everybody, but those are real problems that you face in working with loyal lieutenants who are critical to a business, who may or may not want to sign up for the next journey. A lot of this founder-led and sort of, again, these are dozens to 100-person companies. We spend a lot of time on getting the team right and getting the team right for that leg of the journey. So there's one early practical story of a real challenge and process where this helped.
Now we'll switch into AI. We may head back around into other aspects of the firm and stories as such. How are you kind of approaching AI with your existing portfolios as well as with kind of new investment opportunities?
The framing, I think, is a really helpful one. And let me share a framework that we use. It's one we've borrowed from the literature, but I think for your listeners also, we all talk about AI like we've known it since middle school, but actually this is a new thing. Like, what do we need? And the framework is invention and innovation. So invention is a new capability. Like, I can do it. Like, and AI today is an invention. The collection of technologies allow us to do all these amazing things. It's not an innovation until it's introduced into the market and there's a business model around it. I would say a lot of people today are experimenting with what is the business model around AI? How do I charge for it? What are my customers willing to pay for it? Like, where can I really rely on it? The steam engine was an invention, but once it was put in a ship and it moves the wheat up and down the channel more quickly and bread costs less, now that's an innovation. And so I think that we're right in that moment of going from invention to innovation. And so you see all these experiments being run in the companies, in the private equity firms. And not all of them work. Some of them work well. It's noisy, but I think it's okay to admit that we don't have all the answers. And we're in that process of moving from one to the other. I can give some examples of how we're running those experiments, but that framework, I think, might be helpful to your listeners.
It's a great framework. And keeping that in mind, how do you view like native AI companies that are already kind of hitting the ground running, experiencing some success? Are you looking at some of those opportunities, or are those a little bit too experimental?
There is this exciting moment where you have the new entrants and the incumbents, and they are both trying to solve a customer problem and coming at it from different perspectives. We start with people who start with deep expertise in those industries and understand the customer problems. So we're kind of adapting the AI technologies to that problem, as opposed to AI technologists, delivering a tool. What we found, and I think what most people have found, are the 2 vectors around efficiency in your existing companies. And if I give one statistic, so our portfolio today is a dozen businesses. Year over year, revenue growth was up nicely. Total employee count was down by 2% year over year across all 12 businesses together. Some of that's old-fashioned good management, but a lot of that is like we're now using the tool in engineering, in marketing, in customer support, et cetera. So you're seeing the efficiency gains today. Where it's really just coming into the income statement is on the offer power of the products. And everyone has run an experiment to AI infuse the customer interface in some way. In the very best companies, people are really beginning to pay for that, and it's beginning to change pricing. I think that's a big change for the industry. But sort of efficiency, pretty far along. Offer power, boy, we're still just in that experimenting phase.
Interesting. If you were to characterize Strattam to the audience of founders out there, when should they consider Strattam as a capital partner versus maybe the other firms that are out there?
One is that we think that maintaining that founder innovative spark and sort of entrepreneurial spark, again, taking the capabilities and the invention and turning it into an innovation, is part of what makes a larger firm want to buy the kind of business we invest in. So it's really important to maintain that closeness to the customer. Yes, we're going to instrument. Yes, we're going to professionalize, but maintaining that product focus is essential. And the second is, the founder has a lot to contribute there because they're the only one, but they have that customer insight. And for us, the transparency of what am I going to get so that I know what we're going to do together and can decide, is that for me before I sign the deal? And so it's a little more bespoke with us. It's a little more focused on product. And very much we invite people to have good choices, even though 70% of our deals, like there's no banker involved. All those people also had good choices. So that's a little bit about us, I would say, relative to other choices out there in the private equity landscape.
And is there any particular sector or type of software that you gravitate towards?
We do. We have a number of investment themes. We tend towards vertical specific. We've done a lot of things in and around the supply chain, which is a place that we've spent a lot of time. We've done a lot of things with larger organizations that have a extended constituent base, whether it's a government with citizens or a hospital with their contractors or a university with their alumni. We've spent a lot of time. And so, yes, we've done numerous deals inside these different theme areas.
Got it. We're entering the tail end of the conversation. Two final questions. One is, can you tell us about a person who's had a profound influence on you?
I think maybe we're talking change and this AI wave and like how you go through that. I took my first job out of business school right as the dot-com wave was crashing in 2001. And I had two, managing partners that I worked for. And I'll give two little aphorisms that have stayed with me forever. One, Jay Crandall said, volatility is your friend in the buyout business. When things are volatile and you have capital, that is a great moment. And the other was Mark Wolfson, who said, turn one dial at a time. And again, in these volatile markets, all these things are happening. Let's just look at this one piece and see how, as we control that, we take a step forward. And I think those two pieces of mindset, volatility is your friend, and this is a very volatile world. And how do I navigate within that? Let's take it one piece at a time. I do think about in these days that we're going through.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Well, look, I'll come all the way back to where we started, which is rowing. I have a daughter who is the coxswain at the U.S. Naval Academy Women's Crew, and so we're up there watching and cheering for them. I've recently joined the board of the U.S. Rowing Foundation, which supports all the rowing in this country, which is a growing sport, including the Olympic team and getting ready for the upcoming LA Games. And so that's been a great way to give back to something that's been part of my life for a long time.
Excellent. Well, Bob, I want to thank you again for taking the time for the conversation. It's been a great one.
Thanks, Arjay.